One of my guilty pleasures in life is wearing flashy clothes to charity events, and this jacket is one of my favorites. I'm not trying to show off, I'm just trying to have fun. This wasn't an expensive jacket, but it definitely draws attention. And when we're at a charity event, everyone having a good time means that much more benefit for the charity. Whether it's charity events or the tax filing season, these are two things that bring up a lot of questions about tax deductions. We'll start with charity events and then we'll go to a few more broad things on charitable giving. The question that comes up a lot with events themselves is, hey, do I get to deduct every dollar I spend at a charity event on my tax return? Again, there's some other things we're going to dive into, but let's just assume you itemize your deductions, which means we get to put charitable giving on our tax return. We've got to keep in mind that we can only deduct the portion that is a true donation and that we're not getting value back for. So that means if we bought a ticket to attend the event and there's a fancy dinner, most charities are really good about letting you know the value you're receiving for the ticket. But when we get to the silent auction, the live auction, if we pay $3,000 for a weekend golf trip that was worth $5,000, we got value in return. And so the IRS is going to tell us you don't get to deduct that $3,000. Please go support the event, have a lot of fun, do some good in your community, wear a flashy jacket, all those kinds of things. But let's not create problems for ourselves when it comes to our tax return. Now, more broadly on charitable giving, we need to figure out whether we're in the 10% of taxpayers who get any kind of benefit from giving to charity, or if we're in the 90% that take the standard deduction and therefore are not getting an added benefit from giving to charity. The reminder that I most often give on this topic is that we need to make good life decisions and then figure out the tax efficient way to go about it. Because especially as I'm preparing tax returns, understandably, people want to know, what else can I do to lower my tax bill? And very often I'll get the specific question, well, if I give another $1,000 to charity, is that going to lower my tax bill? And the answer is maybe, because it always is with taxes. If you are itemizing and you give an extra $1,000 to charity, yes, you're going to get some kind of deduction. But where this idea gets misguided is that if we get 30 cents on the dollar, meaning for every dollar we give to charity, we get a 30-cent deduction, or for every $1,000 we get a $300 deduction, we're never going to come out ahead unless we wanted to support that charity anyways. So the joke I'll make is that, hey, if you'd like to give me $1,000, I will give you $300 back as many times as you would like to do that. We can do this forever. And of course, that is a joke. I haven't gotten attorneys involved. I'm pretty sure I would get in all sorts of trouble if I was doing that with clients for real, but it illustrates the point that we aren't doing this first and foremost for the deduction. We're doing this first and foremost to support causes that we care about, whatever that cause might be. And then we're going to go out of our way to be tax efficient about it so that we have even more spending power to support those charities that we care about or to accomplish other goals. So we have to start with a cause we care about, and then we can figure out if in fact we're going to get a tax benefit for that. There are a couple of more in-depth strategies that we can use to try to increase the tax impact of our charitable giving. Things like donor advised funds or bunching our deductions or our charitable giving all in 1 year as opposed to spreading it across multiple years. If we're over the age of 70 and a half, we can use qualified charitable distributions or QCDs to give directly from an IRA to a charity. And that way we skip the need to be itemizing our deductions. It also helps lower our adjusted gross income. So when we get to 70 and a half and we have Medicare considerations, IRMAA considerations, QCDs can have the added benefit of lowering our adjusted gross income, which goes into modified adjusted gross income, which then impacts how much we pay for Medicare. So definitely a lot of quick hitters in there. The donor advised funds, the bunching, the QCDs, those are all things I'll do more in-depth videos on. So stay tuned for that. Make sure you subscribe to the channel so that we can keep getting great tax information out there. And find me on LinkedIn. Hit me up with your favorite way to make charity events a little bit more fun. Happy tax planning.